In this video, I want to show you guys how I was able to generate over $9,500 in realized profit with a very conservative investment strategy, which I call the premium cycle. I have many videos on this channel of live examples which I am currently trading, which I am sharing with my community. And I want to give you guys a quick run through how my strategy, the premium cycle, works. So I am making a full-time income from selling cash secured puts, where I basically commit myself to buy 100 shares of a high quality stock at a certain strike price at a certain expiration date. Okay, so I'm committing myself to buy a high quality stock if it ever drops to my price. And for this commitment, I collect a premium which I get to keep anyways, no matter if the stock drops to my price or if it doesn't drop to my price by the expiration date, I get to keep that premium. So the stock selection is very important, and I have a community. You guys can click the link in my bio where I share my live trades. So after we sell the cash secured put, we can just lay back and wait for the expiration date to come around. And then there's only two different outcomes that can mechanically happen. So either way, the stock dropped all the way down to our strike price and we got assigned, and we end up having to buy the 100 shares of the stock because we are selling options contracts, and these always come in 100 pack of shares. So if the stock dropped all the way down to our strike price, we will be assigned. So now we own 100 shares of the stock. And now we can move on to the second phase of my strategy, where we sell covered calls to the upside. So now we are basically saying we are willing to sell our shares again at an even higher price. And for this commitment, we are going to collect a premium once again. And we can continue selling covered calls as long as we want to until we get assigned to the upside. And then we will realize a large profit because we are going to make capital appreciation between the price where we bought the stock and where we sold the stock, plus all of our collected premiums. And then we can move down again and start selling cash secured puts again. That's why I call it the premium cycle, because we can move in a cycle, and either way we are selling cash secured puts or covered calls. And if our cash secured put does not get assigned, which means the stock just went sideways but it didn't drop to our strike price, then nothing is going to happen. We just keep our premium, we skip this step up here, and we can just immediately sell another cash secured put. So we can continue doing that as long until we get assigned, and then we just move to step 2. And this strategy is perfect for retail investors who have saved up a good amount of capital. I always say at least $10,000. Better if you have $30,000 or more, because as we know, options contracts come in 100 pack of shares. So if you sell a cash secured put at a $100 strike, that's already $10,000 needed in capital. So you guys can see how capital is a requirement to enter this strategy. But when you have this capital, and for example, you want to make an extra income while working your full-time job, or you have already retired but you want to make an even better income while not taking on an enormous amount of risk, because this strategy is all about capital protection, then the premium cycle is the perfect strategy for you to use. So click the link in my bio. I have a full course there how the premium cycle works in detail so you understand the mechanics of the premium cycle. And also, I am sharing my live trades with my community there so you guys can benefit from that as well. So, see you guys in my community.